Hey everybody, Rob Maurer here, and today we are going to be primarily talking a little bit more about Tesla's Q1 earnings report yesterday, now that we've had a day to reflect on it, to think a little bit more about what Tesla discussed, and then we do have a few other news items towards the end. Looking at the stock, the negative reaction to the earnings report, and probably more particularly the earnings call, continued during trading today. Tesla down almost 10% on the day to close at $162.99, while the Nasdaq was down 0.8% on the day. So let's talk about earnings, let's talk about the reaction. As I said in the post-call recap yesterday, I'm not surprised by this reaction. Time and time again throughout the earnings call, Elon Musk pretty much said the exact opposite of what Wall Street was wanting to hear or hoping to hear. Obviously, they ask so many different questions about demand, about pricing, where that's going to be going forward, what margins are going to be going forward. That is the overwhelming focus for Wall Street right now. And that's not to say that there's not a good reason for that. When you see earnings decline, even though revenue and deliveries are growing, that's a huge red flag for any company, let alone a company that has a high earnings multiple. So while it's annoying that the analysts apparently cannot listen to the other questions that were asked and kept asking the same question, it is a question that is worth asking on its own. And Elon's answer pretty much seemed to be, well, we don't really care, we're just going to keep cutting prices, and eventually we're going to make more money because of FSD. The problem with that is that Wall Street certainly does not believe that Tesla's going to be making much money on FSD anytime soon. So if you don't believe that, and you're hearing Elon say that the other parts of the business are just going to be operated at cost, then what reason would you have to own the stock? There would be none. Even if you do believe in FSD, but you don't believe that that's going to happen within the next 6 months or the next 12 months, then what reason would you have to hold the stock during that period where, okay, earnings are maybe just going to be collapsing if Tesla is just going to keep cutting prices and not really care too much about margin? It's kind of hard to think of those reasons when management isn't sitting up there on the earnings call laying those out for you on a silver platter like so many management teams would be doing. Elon then even goes a step further, and instead of giving analysts all these reasons that things are going to be good, he walks through all the things that are terrible that are happening, whether it's interest rates, recession, continued price cuts potentially, the possibility of having to sell cars at literally zero profit. Well, yeah, it's not surprising that the stock is down on that type of rhetoric. So the stock reacts, and that creates a lot of frustration, a lot of questioning of Tesla's management, especially when we're already in a situation where the share price has declined so significantly in the last year or so. It definitely would be a lot more comfortable if Elon would just get up there and tell Wall Street what they want to hear. Yes, Tesla's focusing on profits. Yes, we're going to start advertising and drive demand. Our main focus is getting back to those 20% margins. You guys can count on that, and you'll see next quarter. Hooray, Wall Street is happy, investors are happy, the narrative is managed. But the narrative that people seem to want management to be protecting doesn't do anything to the fundamentals over the long term. Every single item that I have talked about so far has been a short-term item. These are pretty much the only things that matter to Wall Street. This has been proven time and time and time again throughout Tesla's history. And that has been one of the core tenets that has allowed retail investors with a longer-term mindset, a longer-term approach, to find such great investing opportunities throughout Tesla's history. It seems quite clear to me that as Tesla has grown, as they have started to put up real significant earnings, that mindset collectively in the investor community has shifted pretty significantly, which should very much be expected, right? The investor set does change as a company grows. As things become more stable, you've got more risk-averse investors starting to come in. Maybe those Wall Street type of mindsets, those voices start to become a little bit louder. What investors want, what investors expect from the company, that changes over time as those shifts occur. I think volatility then compounds those types of perspectives, those types of desires, because people sit through a 70% drop in their asset value and they look back and they think, man, whatever Tesla could do to just get back to that, I just want him to get back to that. Like, just acquiesce to Wall Street's demands and play the game for a little bit so you can not be down like 70%. I think that has a real impact on sentiment that probably wouldn't have much prevalence at all if Tesla were, for example, a private company that didn't have to deal with that kind of public volatility in its share price, whether that is on the high end or on the low end. Where I think a lot of the friction comes in is that although that investor mindset collectively seems to have shifted over time, I don't think Tesla's mindset really has at all. Tesla has one singular focus, and every single comment, every single decision, and every single repercussion of those decisions needs to be viewed through that lens. Otherwise, there's going to be a lot of friction. And that singular focus for Tesla is driving costs down through scale and through utilization. Scale amortizes cost across units, and utilization amortizes cost across time. In all facets of Tesla's business, there is constant optimization of both. Tesla's mentality, their philosophy, has pretty much always been that earnings, profitability, margins, these things that people are focused on, these are results of the work that they're doing on cost. This is why Elon keeps saying time and time again, hey, if we can just make these things more affordable, There's going to be more demand. We're going to sell more. We're going to make more money. When Elon says that, he doesn't mean over the next quarter. He doesn't mean over the next 6 months like Wall Street is asking about. Elon is talking about over the lifetime of the company. Elon doesn't care about a quarter. He probably doesn't even care about a year. We're 2 decades in. This is meaningless to him. That's why he's sitting up there saying, yeah, if we need to sell cars at cost, sure, we'll do that. We can do that because we'll just make money later. That's fine. He's not saying that's his preference. He's not even saying that he thinks that's what's going to happen. He's just trying to help people understand that if it does come to that, Tesla and only Tesla has the capability to do that. And if they have the capability to do that, that should paint a very clear picture for what the auto market is going to turn into from a market share perspective, because no one can compete with Tesla on cost. So Tesla, again, back to that singular focus, is saying, hey, we're just going to keep pushing on this as fast and as hard as we can. Literally the first sentence in the earnings report saying, quote, in the current macroeconomic environment, we see this year as a unique opportunity for Tesla. As many car makers are working through challenges with the unit economics of their EV programs, we aim to leverage our position as a cost leader. We are focused on rapidly growing production, investments in autonomy and vehicle software, and remaining on track with our growth investments, end quote. This is the biggest capital expenditure quarter in Tesla's history, and despite vehicle inventory increasing, which drags cash flow, they still had positive free cash flow and added to their cash balance this quarter. These are the things that are super important for Tesla over the long term, and guess what? They're going to work. Contrast Tesla with what we hear from Renault today after Tesla's last price cuts. They say, quote, there is no big incentive to go and cut prices and go into a spiral that some of our competition is following. If it results in slightly lower volumes in the short term, so be it, end quote. Renault, you're talking about a spiral, but you don't realize that you're starting one of your own with volume. If you have declining volumes on your EV programs, or if you can't increase your volumes, you're never going to be cost competitive and you're going to die. It is not Tesla in a death spiral in this situation. It is a company like Renault. So for me, as a long-term Tesla investor, both in the past and going forward, the biggest thing I want to see from Tesla is pushing ahead on future growth. And that is exactly what Tesla is doing. Even if you tell me FSD is just never going to happen, that is still exactly what I want Tesla doing, because the growth that Tesla is doing now, even if it's not at some extremely profitable level, is still building the infrastructure, building the supply chain, building everything that Tesla needs to move to that next leg of volume, which is the one that pretty much unquestionably destroys the entire internal combustion engine industry. And what do you think is going to happen then? Can Tesla maybe wring a little bit of profit out of that? I think so. That is Tesla's focus. That is what investors should be focused on. But sadly, Wall Street doesn't care because that's a couple years out. Sorry. They would rather have $1 billion of extra earnings in the next quarter. The reason people get so hung up on today's margins or today's earnings is because those are being used as the basis for extrapolation for future forecasts, which is how the valuation is formed. It has almost nothing to do with the actual dollars that are coming in over that period. So when you think about that for a company like Tesla doing, let's say, $100 billion in revenue per year, whether they make $20 billion on that, $10 billion, $0 per year on that, over the next couple of years, the variance in that range relative to Tesla's market cap is small. It's 5 to 10% of the market cap. When it comes down to it, those earnings are almost entirely insignificant for Tesla. What matters with those earnings is whether or not Tesla can continue to support the growth, which is exactly what Tesla said their focus is on being able to do. So again, great. That is what I want Tesla to be focused on. And then it matters because people extrapolate from that level of profitability. But ultimately, what will provide Tesla with long-term, consistent, and defendable profitability is their cost structure. And that is what Tesla is putting every effort into improving. With the long-term mindset, that is the right thing to be pursuing rather than trying to optimize for quarterly profits today. That short-term optimization will give you a higher multiple today because people will have more confidence in that future profitability. But those forecasts, those extrapolations, those don't matter if that profitability can't be sustained, and the only way to sustain that, again, is the cost structure. So point being, I think overwhelmingly Tesla's focus is on the right things. I'm very much aligned with not throttling production for the sake of supporting margins, and although that might lead to some more painful financial reports over the next few quarters, I think the advantages that will ultimately afford Tesla are more than worth it. Now, with all that being said, I'm also not saying that there's nothing that Tesla could be doing better, handling better, communicating better in this interim period. I think there are plenty of those, and I think they're more than worth talking about, but I think sometimes those things can be overemphasized, especially when there is a period of pain from the stock. It's hard. Like, no one ever said this was easy. I've held Tesla for a decade, and there's been maybe like two years that have been easy to do that in. It's usually a grind, and there's a lot of volatility, and there's things that go wrong, and sometimes things unfold differently than we expect, than Tesla expects, etc. I mean, that's kind of the whole point of Tesla Daily, right? Even if you just buy and hold for a decade, you still got to make that decision every single day. So we've got a lot more to talk about on this. I do want to spend more time on things that I think Tesla could be doing better. There's stuff there with communication, particularly around guidance. I do want to spend a little bit more time talking about demand and demand generation. But I think what we talked about today is where the conversation needs to begin because I think it informs how Tesla is approaching the business. For now, though, we'll move on. Just a couple of other quick things I wanted to touch on. One is related to earnings, so we'll start there, and it was the foreign exchange impact. This had a big impact, so I want to make sure that everyone is thinking about it correctly because I definitely didn't get quite all the way there yesterday. But if we look at how Tesla listed out various different impacts, the $800 million negative impact from foreign exchange is in the revenue bucket, which means it would be impacting average selling price, pulling that down a little bit. But if we look at profitability, Tesla doesn't mention foreign exchange in profitability, so it's not fair to just put that right back into margins. This implies that foreign exchange also negatively impacted Tesla's cost of goods sold at a similar rate as it did revenue, so therefore not really impacting the profitability, at least from a margin percentage perspective, but potentially impacting the dollars a little bit because if you have more revenue at the same margin, well, you earn more dollars. To make sure we're thinking about this correctly, we can go back to Tesla's Q4 shareholder letter, where they also disclosed a negative $1.4 billion impact on revenue from foreign exchange. But in Q4 under profitability, they also listed foreign exchange as a negative $300 million impact. Again, nothing of the sort listed for Q1 profitability, and when Zach talked about margins on the call, he attributed the miss to changes in pricing, and then warranty expenses and some autopilot-related deferrals. So no mention there either of foreign exchange, so hopefully that helps clarify what the exact impact here for this quarter was. As far as analyst reactions to earnings, we won't spend much time on this. I did tweet out a reaction from Alex Potter last night. They reiterated their $300 price target and overweight rating. A lot of analysts, though, basically just reacting with minor price cuts, which you can see a little bit of those here. ARK Invest has also updated their Tesla model and price target. Remember, though, this is for 2027, so not the typical 12-month price target that we usually see from analysts. I haven't had a chance to look at it yet, but my guess is my thoughts will be pretty similar to the last time we had talked about it, but maybe we'll come back to that in a future episode. All right, the last couple of items then, Tesla today did update their mobile app, version 4.20.69 on April 20th, and they have now added the Tesla Trip Planner into the mobile app, which I think is a really nice feature for planning ahead when you're not actually in the vehicle quite yet. Next, the EV tax credit listings have been updated by fueleconomy.gov, and it looks like the Volkswagen ID series is actually going to be eligible for the full credit. That has been newly added to the post-April 18th list, and Rivian has been as well. They are eligible, it looks like, for the half credit. And then finally today, last but certainly not least, a monumental day for SpaceX and all of humanity today with the first integrated test flight of Starship and Super Heavy. It did clear the launch pad, it did clear max Q, maximum pressure. Stage separation, though, was not successful and ultimately rapid unscheduled disassembly. Nevertheless, a massive success for SpaceX, so a huge congratulations to the SpaceX team. All right, last thing before we wrap it up, I may leave this episode out here as the last one for the week. That'll help get it a little bit more broadly distributed. And I think this one's an important one for people to hear, so I might just leave it out there and not do an episode tomorrow. We'll see. If something comes up, then I will, but if there's nothing really newsworthy, then I'll leave this one out there and maybe we do a Twitter space or something like that. All right, so that's it for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you for the next episode of Tesla Daily. Thank you.